Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, here to give you my honest and professional opinion about the real estate market. This week, I'm going to get into the April statistics, what I have from them, and a little bit of news that I caught that I found interesting. So first of all, let's get right into the statistics. And as always, like, share, subscribe. And anyway, like I said, let's get right into this here. So I wanted to kind of touch on a few markets. I only have information, as previously stated, to certain markets, Ontario excluding GTA, but I do have other sources, and they haven't released, like Toronto Real Estate Board hasn't released their April stats yet, so I got what I could. So I got different sources of information just to see the general trends here. So here we have, this is from House Sigma. It's a site, it's pretty good actually if you're looking for sale prices on homes and whatnot. Just some basic stats here. Median price in all of GTA is 1.1 million, and it's up 16.4% year over year. 5 years it's up 56%, etc. But let's see how that stacks up in real time. Compared with March, it's down. The median sale price is down 6%, and it's down 9.1% from the highs of February. And you can see here on the graph, it's clearly on a downtrend, and it was, the February highs was 1.21 million for the median sale price, and this is for all residential units in all of GTA. And a really important is the sale to listing ratio. So for every new listing, how many sales are there? And usually anything 55 and above is good, or 55 is a balanced market, and above that's a seller's market, below it is a buyer's market. In April, just passed, it's a 41.6% sale to listing ratio. So well below the midpoint. And you can see it's clearly turning into a buyer's market there. But at the same time, not all sales might have been reported for April because it's only May 2nd, May 3rd by the time I release this video. So not all sales have been reported. So that will probably creep up a bit because of conditional sales with financing and whatnot. And when we compare that number to April of 2021, it was 62.3%. And you can see the bottom peaks there where it drops down in December. Those are usually look like they're December numbers. There's actually more sales than new listings, but that's certain months of the year that happens. But April is pretty representative. Lots of new listings, lots of sales. Of course, we've lost 20% or so since last year on that ratio. This was actually a pretty cool statistic I found here, which is the absorption rate. It talks about how fast homes are selling is calculated as homes sold divided by homes currently listed. So not new listings only, but all homes that are listed. And you can see the absorption rate dropped down into a balanced market, as they call it, in the green. But you can see it dropped significantly from the high in February, and March is that little kink, and now it's down to, so it really did drop quick, but it rose quick too in previous months. This is actually a great indicator to judge the current market. Yeah, now let's move to Calgary. I'm trying to get some of the bigger cities. Just a few of them here because I always focus on Ontario. That's where I'm from. So Calgary's a little tougher because, again, for me to get the statistics, and everything seems to be a year over year, which everything's up year over year anywhere in Canada pretty much. But you'll see here, sellers market conditions continue in April. And, this was released today, May 2nd, when I'm making this video. And this is from the Calgary Real Estate Board. And it's following an all-time record high month of sales in March. Activity slowed down in April. However, with 3,400 sales this month, it was still a gain of 6% over last year and a record high for the month of April. So they are having a slowing trend, it looks like, but not compared to the other bigger centers that we're going to look at. And of course, their average price is a lot lower, so it's going to affect, they're going to have a lag time in their area. And here's just a quick look, and this is how they present their data, a couple of quick trends here. You see the sales they're up year over year, but they are trending down. You can see the arrow. New listings are also trending down, and they're down year over year. And the inventory is down year over year, and it's kind of balanced, or it's maintaining its position. And the months of supply is down year over year, but it is trending up, so they are going to increase the months of supply. And now we're going to get into Vancouver. Again, just some data from wherever I could pull it from, zolo.ca. The Vancouver Real Estate Board hasn't released their information, and again, it's a lag time, and this is only the 2nd of May. So you can clearly see all properties, the sale price, the average sold home or average sold price is down, it's trending down. And you can see for all types of properties, that's the same on the right-hand side. And here we have the number of sales and the inventory. So inventory is increasing and the number of sales has decreased somewhat, not dramatically, but it is. But there's becoming more inventory and fewer sales. And then you have average days on market, which average days on market hasn't changed a whole lot. Okay, so now we're going to get into the numbers that I know best and that I get the data for, the full data, and which is the Ontario, everything surrounding GTA. So pretty much all the areas that surround GTA. The average sales price has continued to decline, and it's down 5.5% from March. So April's down 5.5% from last month, and it's down 8.2% from the February highs. So we are continuing that downward trend. And just a graph that shows the number of homes for sale. So we do have inventory. Sales or number of homes for sale actively on the market is increasing. So our inventory is increasing, which is a good thing because people complain about inventory. And of course, our sales are decreasing over time. Well, especially this month. So our sales are starting to decrease. Last month, they increased with inventory increasing. This month, they're decreasing and inventory is increasing. So we're having a separation of trends on both of those, but overall that means it's a slowing market. Average days on market is starting to creep up. It's still very low. The average percentage of last original list price, and of course it's trending down as expected with a slowing market, and it's still at 111%, which is crazy. But you got to remember, a lot of people still are listing low, trying to get the multiple offer situations going. So that does affect the true numbers, but it's still a very good. Even without that, it would probably still be 100 to 105%. And lastly, probably one of the better indicators of the market is the months of supply is increasing. So there's more supply, there's more listings coming on the market, and there's more supply. So as the market changes, obviously this is going to increase, and it'll keep, I'm guessing it's going to keep going back up. So again, overall, what we've seen in most markets, besides Calgary, but it is starting to trend down, is more inventory, less sales, and an overall decrease in average sale price from anywhere from 5 to 10%, depending on the area. And these, again, are the biggest metropolitan areas in Canada, right? Vancouver area, Toronto area, Ontario. We can confirm that the market is trending in the same way. It is trending downward, which isn't a bad thing. The market's still exceptionally good. And again, like I say all the time, it went from insane to very good, but it probably will. I'm going to make a prediction here. As long as the Bank of Canada doesn't turn around and start dropping interest rates, if they stick to their tightening policies, it will keep trending downward with sales and sale prices, which needs to happen. Our sales prices are way inflated, and the market will continue to slow. Now you got to remember, we're in spring and it's slowing. So that's, again, they talk about seasonal adjustment, right? So summer will be a big one. It's going to be a slow summer, I'm going to predict, and our prices will continue to decline. Luckily, I'll give whoever's going to take credit for it. We haven't entered into like a crash situation, which is perfect, right? You don't want that. I don't want that. Nobody wants that. Regardless of how high prices are, it's not good to shock the economy like that. But we've started off on the right path with reducing demand, reducing the prices, the overinflated prices, and we're heading in the right direction. So we'll see where it's going to go from here. But my prediction is it will continue as long as there's no governmental or federal interventions that speak otherwise. And lastly, I found one of the articles here. I don't like read the news religiously every day about real estate, but I do watch the headlines, and this one got my attention. Canada's plan to ease runaway housing prices could backfire on Trudeau, experts. Now, whoever these experts are, who knows, but I found it interesting. And you can see, let's just read this. And I agree with most of this. The Canadian government's plan to ease runaway housing prices by rapidly ramping up the pace of home construction risks pushing up construction costs in the near term and could lead to oversupply in the long run, experts said. Vowing to double home building to keep up with population growth and address a shortfall that has helped fuel a real estate boom, Prime Minister Justin Trudeau's Liberals last month outlined plans to build 3.5 million homes over the next decade. Well, I think that plan's terrible anyway, but regardless. But experts argue Canada's housing shortage is not really as acute as the government suggests, noting starts are running at historic levels, around 250,000 a year, with a record number of units under construction, though completions lag. So what they're saying is, obviously they said they're pushing to build more houses. It's going to increase construction costs in the near term. And by the time these houses are built, there's going to be an abundance of homes that we don't need. So it's going to, in my opinion, if they did meet this 3.5 million home construction target in 10 years, they're going to sway the balance from an oversupply to an over demand to an oversupply. But anyway, they're saying that the construction costs are going to be increased in the short term, which is the worst thing we can do right now with inflation, and then it could lead to an oversupply in the long run. So again, we're going to have this balance is going to come back to normal, I believe, given increased interest rates and policies like that. But we're also going to have an oversupply of new homes that have been built on the market. So now we're going to have an oversupply issue, which is the opposite of what we have now. And we are running at historic levels for housing starts, 250,000 a year. So we're building more houses than ever. And I've talked to people just today. He said there's builders that have hundreds of homes to build, and they haven't even had a chance to build them yet. They've got them sold. So we do have a lot of homes in the works being built. And again, brings it back to, I think these politicians are wrong when they preach supply and demand. Let's increase supply. I think that's the wrong thing. I think the policies and the interest rates will fix that. And of course, their lack of is what caused it. Anyway, let me know what you think in the comments, and hopefully you got some value from this video today. I'll be back again next week, and until then, enjoy your night.